think we've got it. Live in living color. All right, thank you everybody. I appreciate your patience in getting things started. You know, from a technological standpoint, I sometimes connections break, and we've got to reconnect to those those applications that we rely on a daily basis. So that happened today. I'm glad you're in the session now. Let me just make sure that you can hear me and you can see me okay. If you could go over to the chat really quickly and just give me a hello, thumbs up. I see Isma and Flavor and Taylor and Chris. Yoop, hello. Randall, Allison, a lot of people in here now. And we should be cooking. Hey, Jason, what's going on? All right, looking good. Claudio, hi. All right, sorry about the delay here, but I'm ready to dive in. My name is Daniel. I'm with VantagePoint AI, and today we're going to spend time talking about the options trades you need before January 2024. There are, let's call it 25 days or so left in this year, 24 days, calendar days we're talking about. So we've got to understand what opportunities lie between now and the end of the year, because as the new year rolls over, it's going to be important that you've zeroed things out and set yourself up for success. Just a quick reminder as well for everybody that today we're talking about trading, and trading involves risk. You shouldn't be trading with money you can't afford to lose, right? Risk management is key to success because trading's hard. Let's face it, there is no perfect solution out there. I'm going to be spending time today showing you how to stack the odds in your favor, but you still got to have good money management. So, hey, JS, Renee, thank you for being here. Appreciate that. Wayne, hello. Glad you're in the room. I'm keeping my eye on the chat if you can't tell, so that if anything breaks again, we can handle that as it comes up. So just let me know if that's the case. So how do we get to, I think in the write-up for this session, what I said was, I want to teach you the what, the how, the why, not just give you three names. I could give you 3-4 stock names, right? I could sit there and I could give you that information, but I'm not just one to hand you a fish. If you've been part of this VantagePoint channel and you've subscribed, by the way, if you're in this session and you're listening to this live right now and you haven't already subscribed to the VantagePoint AI YouTube channel, just hit the subscribe button, and anytime this session or a session like this comes up, you can get notified of that in advance. And there's a lot of great information on the YouTube channel, so subscribe if you haven't already. But the what and the how and the why, I think, are all important and are all connected. So before I just throw out the options that I feel like have the biggest opportunity that I saw coming into this week, let's talk about how I came to that conclusion, right? To do that, I'd like to understand, if you're in the session right now, you're hearing my voice and you're involved, are you a VantagePoint family member? Do you have a VantagePoint license? Are you a user of the VantagePoint software? If you're not, let me know that in the questions box, please, and then it'll help me understand how deep I need to go into the information behind what we're talking about today. And when I say how deep, what I'm talking about is the VantagePoint software. That's the program that I rely on to come up with my information to determine which trades have the best potential and why. I'm going to use the VantagePoint software, dig into the details, but I want to show you why I put everything I've got into the software. I don't make a decision without it. I check it daily. I live in the software personally, obviously, because this is what I do for a living. But trades aren't going to happen unless I've looked at the VantagePoint software and confirmed primarily what the artificial intelligence is saying. All right. Hey, all right. Yes. Renee, Chris, I see that. Andrea, Allison, all VantagePoint users. That's great. If there's anybody in this session right now that isn't currently part of the VantagePoint family, let me know that as well, so I can break things down elementary as possible, so that you see where this information is coming from. And don't get me wrong, it's artificial intelligence. It's a very complex software program that does a lot of information, does a lot of programming, and it does a lot of analysis behind the scenes, but it's very simple to interpret. So I'll dig into the details of that information so we can really understand how it can help you. Let me just change my screen here. I'm going to bring up the VantagePoint software. Here we go. I've got the VantagePoint software pulled up, and you can see right now what we're looking at is the SPY, the S&P 500. And when you think about the S&P 500, whether you're an options trader and you trade on the S&P 500 or you use it as a guide, I want to start here to give everybody a good baseline for what I'm seeing and why I'm seeing it. And then we're going to walk through the process that I use to come up with these options trades that you need before January 2024. And a couple of them have already today produced massive, massive gains. Hey, Daniel, nice to see you, my friend. Glad you're in this session. Daniel and I had a great chat over dinner here in Tampa and got to know each other very well. So as I have several of the people in this session, it's always great when I get to shake hands and meet you face to face. So nice to see you in this session. So what I'm doing by looking at the SPY is, first of all, understanding the flow of the markets. And you can see by looking on the right-hand side of the screen, and I'm going to go get my pen here so I can start chicken scratching all over the software, and you can see basically what I'm looking at. There we go. This is what I'm looking at. I'm looking at this region right here, the right-hand side of the chart. Of course, there's some really great trends and some fantastic moves on the left-hand side of the chart. These are, big winners. If you're an options trader or you're just buying the SPY or selling the SPY, short selling it, some great moves here. But what I'm looking at right now is what kind of trend are we in? How long has that trend been going, and what has the artificial intelligence been saying lately about the information, about what we're noticing in the trend, all right? I'm going to use that information to draw my conclusions to say, okay, I see this in the artificial intelligence. I see this on my charts, and some of you are probably using charts and graphs and other programs, and that's perfectly okay. Every trader needs to have a good toolbox, right? Just make sure that if you're going to be going to that toolbox, that you're grabbing the right tool for the job every time. For those of you that that I've talked to in the past about that, you're not going to dig a pool with a shovel, right? You're going to use some heavy equipment, a backhoe or something like that. The right tool for it doesn't mean I couldn't dig a pool with a shovel. It's just going to be a whole lot harder. It's going to take a whole lot longer. It's probably going to be more expensive, and let's face it, I'm going to be worn out when it's all done, where I can do it with a backhoe and get the benefit of tools. And the reason why I say that is because if you're using other tools, ask yourself, are they the right tool for the job? In this case, we're looking at the S&P 500. We're looking at the ETF. It's the SPY. So when I look at this, what I'm saying is I want to know what the overall market is expected to do from an S&P standpoint. I'm looking at this blue line and this gray line relationship, and I can see the blue line is above the gray line. It's very clear. Everybody can see that. I can see that the shaded area is green between these two lines. Well, this is the artificial intelligence saying that there was an uptrend starting back here at this crossover, and it's expected to continue going up even into today. The blue line is still above the black line. Now, how I can interpret that very simply for those of you that still have questions around that is, that blue line, I'm zooming in on it for you, that blue line is basically saying over the next couple of days, that's where the gray line would be expected to be, right? Not much higher, but still certainly higher. That means in the next couple of days, that gray line is going to pull higher. The only way that gray line pulls higher is if prices are increasing. And if prices in the SPY are increasing, then the value of this trend or this trade is moving higher. All right. Hey, good morning, Isma. I'm glad you're here. All right. So if we're looking at this and we can see that prices are expected to be higher from a trend standpoint, that gives me all the information I need to know that I could still be thinking bullishly. Now, obviously, the bullishness of the trend back here is stronger than the bullishness of the trend right here. But that doesn't mean that there's still not bullishness left in this. So if I'm thinking about options, I'm thinking about a couple of things. I'm thinking about either selling some puts or buying some calls, right? I'm thinking about bullish option strategies. Whatever strategy that I'm applying to a bullish market is what I'd be applying in this scenario. Why do I have that kind of confidence in this forecast? For those of you that don't know, this information came out at 6:30 p.m. Eastern Time last night. It's updated every night at 6:30. It's end of day data. All right, the end of day data will tell me what's expected to happen over the next few days. So I've got to look at this on a daily basis, either at night after I've had dinner and it's time to check things out, or in the morning before the market opens. Whatever works for your style, I look at it at both. But what it's telling me is that there's still bullishness left in the SPY trend. All right. Now it's weakening a bit. That trend strength is weakening. It's almost bearish from a strength standpoint, which means I'm not expecting this thing to skyrocket. I'm not expecting this thing to rally. I'm just expecting it to continue a little bit more bullishly than bearishly. That's the information that I got from this and this. I also get some information from these indicators. These are momentum indicators, and all I'm looking for, if I go back 5 days, and I say, all right, over the last 5 days or so, have these been creating lower highs, higher lows? I could even go back to the beginning of this trend. Look, let me back it up. If I mark the beginning of this trend and I say, all right, here's a crossover, this is the day that I would have marked this, do I have lower highs or do I have higher lows happening from these indicators? Well, 2 of the 3 of them have lower highs. Here's the high in the pink line. Here is a high. Here is a high. Those are lower highs. That pink line is a 2-day predicted momentum indicator, right? That 2-day predicted momentum indicator is clearly saying that there is bearish momentum working itself into this market right now. Same thing here with this blue line. That from here, here's a high, here's the high, here's the high. Same thing. The 1-day predicted momentum indicator is also bearish from the beginning of this trend. So that means the momentum has been waning the longer that this trend has been going. Now, if I look at the long-term one has a higher low. It's creating lower highs for sure, but yesterday's reading compared to the reading from the beginning of this trend, it still has a higher reading. So I've got a little bit of bullishness in my long 3-day predicted momentum. So again, that supports the hypothesis that the SPY still has some bullishness left in it, that the SPY still has an opportunity to move a little bit higher. Which means if I'm thinking about bullish option strategies, I'm also needing to check volatility, and also needing to check, if I check my IVs, I check my open interest, I should be thinking about in the money calls, in my opinion. Again, this is educational. I'm not providing trading advice, but if I'm thinking through it, that's how I'm using this information. I can also go a step further here, and I can use the predicted high and predicted low. The predicted high and predicted low, this is telling me with this little shaded green area in this gray bar, this is telling me that I can expect a higher high than the previous day and a lower low than the previous day. So I've got a pretty decent range here. If I just drop my cursor up here, I can see I've got what, around 458 and change. Call it 458.60 to 454. Oh, I got it right over here, 54. There we go. That's the range I'd be expecting from today. All right. I'm going to go check the SPY really quickly and see what the SPY high is today. SPY's high is 458.84. All right. So the SPY came in exactly right around, I can't even get to it. There you go. There's 458.80, right? Right around where VantagePoint predicted from a high, and the low today, 456. So the low is a bit higher than what was expected. So again, you can see how using this information, I said before I checked that high and low that I'd expect a little bit more bullishness, but no big rally. The market has been trading right basically within this range today from an S&P standpoint. This is where it closed yesterday. That means it's a little bit higher, no rally, but still more bullishness. I came to that conclusion because these predictive indicators told me last night at 6:30 p.m. Eastern Time that the bullishness was still there. More bearishness is working itself in, but the bullishness was still there. And I haven't even cycled through all my indicators yet. For those of you that are VantagePoint users, you know these are the 4 points of confirmation. And when you think about the 4 points of confirmation, that's the beginning of interpreting this information. From there, we can layer on more indicators. But before I do that, before I start to layer on indicators, I just want to show everybody where these indicators are generated from and why I put so much value in them. If I look at the SPY and I right click on it and I go to the market details, I can open up the market details on this tab called Intermarkets. All right. You guys should see that. And before I dig through this, let me just see if I've got some questions rolling in. We can look at Apple, sure. I see some requests, so I'll take some requests here at the end. The gold ETF, Meta, Apple. We'll get there. But first, remember what I wanted. If you've just joined this session, the one thing that I want to make sure that we're doing in this session is I'm showing you the what, the how, and the why. What's on the screen right now? This is the how, right? This is the how. I was just talking about the why. Why I'd feel a certain way about a certain asset. And when I say feel, it's not even feel. It's more about I'm going to trade off of what I can see, right? I'm not going to trade off of what I think or feel. This is how this is being done. Look at the screen right here. Right in the middle of the screen, for those of you that don't know, this is what we would call the target market. And the target market is the target or the market or the stock or the ETF in this case that you'd be looking at to do your interpretation of the indicators, okay? All right, so when we look at SPDR, we see the SPY here, and you can see it right here on the screen. It's looking at a host of ETFs that have been found to influence and impact the SPY. A lot of them. Look, this one you're probably not even looking at, or the JP Morgan emerging markets. You're probably not even looking at, but it's also looking at the US dollar. It's looking at gold. These are target markets, and these are markets that have impact every stock and ETF, in my opinion, right? Light sweet crude oil. How we came up with this list or plot or chart or diagram, whatever you want to call it, is the artificial intelligence. The artificial intelligence has scanned all 10,000 markets around the world and figured out by looking at the open, the high, the low, close, volume, and open interest for all of the stocks, ETFs, futures, and all the markets that we can get our hands on. And what the AI is doing is looking for hidden patterns and relationships. That analysis is called intermarket analysis. For those of you that are license holders and have this software, that's a review for you. For those of you that don't have this software already, intermarket analysis is a patented process that we utilize. Nobody else in the world is doing it, and we're using AI to do it. And we've been using AI to do it for over 32 years. All right? That we're not some newbie. We're not some newcomers. We've been using AI for over 3 decades, and this is a patented process, which is why when I'm looking at the indicators, I can draw my conclusions confidently. I can make decisions around where I would expect the SPY to go without second guessing those decisions, because the artificial intelligence process, that patented process, is way more powerful than my brain. I read a stat, something on AI is more powerful than 7,500 human brains. And I've been utilizing this technology for over 12 years now, so there's no doubt in my mind. But if anybody has questions on how this analysis works and how you can utilize it for your benefit, you can go to VantagePointForecast.com and reach out to us. Happy to answer those questions. The AI is powerful. How we've been using it for over 30 years, that credibility and the history, you've probably seen, Lewis Mendelson or Lane Mendelson, our owners on the NASDAQ, on Yahoo Finance. I mean, there's so many places because so many people have been asking about this technology. Right now, what the AI is saying and what this patented technology is saying, because these are all predictive indicators that I'm reading, which is, by the way, a second patent. The predictive indicators are saying this trend is expected to continue bullishly. Good. Well, now I know which way the river, the flow of the current is, right? Bullish. All right? All right. I'm going to do something else. I'm going to drop a line right here at this high. And the reason I'm dropping a line at this high, 459.79 roughly, is because that is a resistance level. I can see it very clearly that there's 2 highs to the right that are lower, 2 highs to the left that are lower. And the reason, I'm going to color this red just for a second. I'm just doing a manual resistance level for everybody so that you can see what's going on in my head. The reason I'm doing that is because I need to know that there is still room from yesterday's close to that resistance level, because that resistance level has been there for, a couple of days, and it goes pretty far back. Matter of fact, I can even go into my indicators and drop an indicator that I call the 52-week look back on here and see if that level that I just put is the 52-week high, and it is. That means that resistance level is the highest the SPY has been in 52 weeks, all year long. there is room from the close to that level, which means there is still room for bullishness. Now remember, where did we see the high already on the SPY, and where is this level? This level is at 459.65. We saw a high of 458.80 or something like that. Between what VantagePoint predicted of the high and the 52-week high is exactly the high of the day for the SPY so far. Now it's early in the day, so there's room for that thing to move, but it's not by accident that the AI said bullish, but not a whole lot of bullishness. It's not by accident that momentum's been saying for a couple of weeks that momentum is fading, that the strength is weakening. These predictive indicators called this and have been calling it for multiple days, if not weeks, that there is bearishness expected. But short term, for you swing traders that want to grab some quick options trades, there is room between the close yesterday and the 52-week high. That room means there is money to be made. All right, let me just look over the questions box and see if any questions pop up. I don't want to move too quickly through this information because I think it's very, very valuable information. Well, you tell me, is this helpful so far? Are you seeing why how I come up with this information and the what behind it? Sorry, I had to get a drink, if you could tell. Do a lot of talking. I appreciate you giving me a second to do that. This is a live event, right? I'm here. By the way, if you're liking this event and you haven't attended one of these before, I just subscribe to the YouTube channel and you can get notified when these live videos get started. All right. All right, good. I'm going to kick off the 52-week high. I know I've got some room to the resistance, not a whole bunch, so I'm not expecting some major rally or anything like that, but there is still some room to the upside, okay? I can put on my verified support zone, I can put on my verified resistance, and I can see that the SPY is moving into a channel. Now, these are extra indicators that not everybody has that I've added. I mean, you can have them if you want. Just let us know in VantagePoint University if you do want these indicators, but This is the resistance level and the support level that are currently impacting price. And you can see this support level was set here and it's verified there. And you can see that there is a channel building right here. Bang, came down, didn't get up there, got up there today, came down. This channel means that there is consolidation, more bullish than bearish consolidation, but consolidation nonetheless working its way into the SPY. Okay, so then I've got to be thinking about short-term trades, right? I can set my expiration out and grab the January 19th expiration, which I'm going to talk a little bit about that today. But I'm not thinking about holding a trade for weeks on end. Heck, I'm not thinking about holding anything into the beginning of the year. You know, the year open price is a very, very important factor in my opinion when it comes down to trading. And I want to kind of reset before I need to look at that year open price. So I'm thinking short-term opportunities to the bullish side. So that brings me to my next point. What are those? What are those markets? What are those options markets that I was talking about? To do that, I want to go to IntelliScan, and I want to show you another kind of analysis I did on sector scan. For those of you, again, that don't know, IntelliScan is a scanning tool within the VantagePoint software that will scan whatever I tell it to and indicate for me which markets, which stocks, which ETFs have more bullishness. This specific scan is something that I built here that we use at VantagePoint, and it's called the sector scan. And I'm using the sector ETFs. You can see all the symbols right here. And I'm using the predictive indicators right out of the box, as well as some seasonal information to help me understand what's expected to happen over the next 10 days, call it 1 to 10 days based off of the indicators I'm looking at. There's a few things that are drawing my attention, right? Consumer discretionary, right? That's one. Oh, look at this. We've got bullishness a lot. Biotech. What else? Technology, I've got bullishness. And all I'm doing is looking at the green, right? If I can see, real estate, Spider has a lot of green. What am I missing? Retail has a lot of green. So there's several sectors here that I should be thinking about and can be thinking about. Heck, healthcare. Look at that. Over the next 10 days, is expected to pick up 1/3 of a point as an ETF standpoint. Okay. Staples. Staples doesn't have a whole lot of green from the predictive indicators, but it does have some bullishness. So I've got 4 or 5 sectors that I would be even considering. Retail, consumer discretionary, right? Technology, real estate, staples, healthcare, biotech. All right, so I've got my list of sectors that I need to be thinking about. I've got my list of sectors that I should, if I'm looking for a new options opportunity or more position, I should be thinking in those 6 sectors. It doesn't mean that there's not a potential for a utility stock to take off. That doesn't mean that's not the case. It just means I want to stack the odds in my favor. So I'm using the intermarket analysis patented process. I'm using the predictive indicators that are patented as well. I'm using the capability of this software to scan by sector with those predictive indicators. And I'm using seasonal data for each one of these ETFs to tell me what's expected to happen based on the seasonal performance. This is powerful. What's great about this is I'm walking through this step by step with everybody in here in this session, and we've only spent about 20 minutes doing it, right? Imagine, for those of you that are using it, if you create this process where you get a good market overview. I just did one market. Usually my market overview has about 8 or 9 markets in it, sometimes 10, depending on what I'm looking at. But imagine being able to do that on a regular basis, day in and day out. And then how quickly and proficiently you'll get at it. So I've got those sectors marked down, and this is the process, the literal process that I use to get to these options opportunities that I'm going to be talking about right now. So if you're in this session, stay tuned. I'm going to dig into the details on these options opportunities and tell you why, what, and how they came to fruition. The analysis I just did, that's how I got to these, right? What indicators I'm using, I showed you that. What are these opportunities? EW. This is a biotech company. EW, right? This is in healthcare. It's Edwards Life Sciences. That was one of the sectors that presented itself, right? If I bring up Edward Life Sciences, you can see that if I scroll in, and you can see there's a great trend that started back here, and there's already bullishness happening in EW. Well, why is it important? First of all, to understand what's going on with the trend. This trend mirrors of what the S&P was doing, right? Well, if I've got some bullishness in the S&P still, then if I've got more bullishness in EW right now, then this could be a great opportunity. So I look over here on the right-hand side of the screen. I've got bullishness in the trend. I've got bullishness in strength. My predicted high is expected to be a little bit lower, so is my low. If that comes to fruition, that's okay, because there is a lot of bullishness in this predicted candle above yesterday's close. I'm okay with that. I've got, from the beginning of this trend till now, I've got higher lows on my 3-day, I've got higher lows on my 1-day, and I've got higher lows over the last 5 days on my 2-day momentum indicator. Here's the beginning of this trend, and you can see, here, I'll do it with dots. If I connect this to this, I got a little bit of bullishness, but not a bunch. If I connect this to this, I've got a little bit of bearishness, not a bunch. If I connect this to this, I've got a little bit of bearishness, not a bunch. That matches the S&P. But now look at the last 5 days, right? Connect this to this. Last 5 days, there's bullish momentum there, and bullish momentum there, because those lows would create a positive sloping line. So I've got an asset here. I've got a stock here that presented itself a couple of days ago to me in my scan, and said, you know what, this is a good opportunity that has some potential gains between now and the end of the year. So I'm thinking about the January 19th expiration. Does anybody know? Go to the questions box really quickly, the chat box in YouTube, and tell me, why would I be thinking a January 19th expiration? How long would I be expecting to hold something with a January 19th expiration? I'll give you guys a chance to answer, and I'm just keeping my eye on the chat box. January 19th is the beginning of the year. I just said a few minutes ago that I'm not interested in holding these to January 1st, 2nd, 3rd, whatever the beginning of the year is. It's usually, the 3rd, 2nd. I'm I'm not interested in holding these to it. But why would I buy a January 19th expiration then if I'm considering only holding in a couple of days, right? I'm setting my expiration out to the beginning of the year, but I'm probably only going to hold these, for, heck, if they hit the target in a day, then so what? Now, from an educational standpoint, let me tell you, I'm going out to the monthly. A lot of open interest out there at the monthly, right? But I'm not intending to hold it that long, which means I'm going to have an impact on time decay. I am going to reduce the impact time decay has on the value of this option simply because the closer you get to the expiration, the more aggressive time decay is. That theta will move faster as I get closer, right? Exactly, Jason. Thank you for that. And you guys are all thinking of Craig's thinking about the right way, higher volume. Yeah. Okay, 2 weeks expiration, 1 month, a lot of different strategies. This one is the one that I like the best. So I'm talking to January 19th. Yes, Jason, would I prefer higher highs? Absolutely, I would. I would prefer higher highs. But remember, the sector, healthcare and biotech, we're all expected to be bullish. The S&P expected to be bullish. So I'm going with the flow of this. All right? All right. So I got a January 19th expiration. What strike? In the money strike, right? We're not going to hold this thing very long, so I don't need an out of the money strike where I burn up money. I need an in the money strike. I need something that is going to give me the best opportunity, and I could probably get something at like 65, depending on the stock, and you can check the options chain. The 65 strike with a January 19th expiration gives me a bid ask around 6, and I know that because this is the process that I use to find the opportunity. January 19th expiration with a bid ask around that $6 is already up, 5% on just the first day, right? From an options standpoint, that's a great first day. And I found it using the same process. So EW is one of the ones that's on my list. EW is one of those stocks that I said the options trade you need before January 2024. That's one of them. BLDR. Here's the other one. Why BLDR? Does anybody remember which sector had some bullishness when we did our sector rotation scan? Real estate. All right? This is a services company, right? You can see from a sector standpoint, it's in the services sector. It's related to real estate, builders first source, which is why I like this opportunity. But I also can see here, since earnings, here's an earnings 11.1. You can see earnings were bullish, expected to be bullish, and the thing skyrocketed. Didn't fill that earnings gap, bounced off of that support level, and then gapped again and never filled that gap. It didn't look back. This is a very powerful gap strategy. When you've got a big gap with a high range day, bullish candle, that indicates bullishness. If you don't know that gap strategy, that's okay. It's a highly accurate one that you can see on a lot of different charts. Jason, let me see. I see some questions. Is there a way to interpret ROC's slope of some suggestions to rank that ROC from the... Jason, these are very good questions that we can certainly dig into. Probably not in the YouTube Live. Dig into that in VantagePoint University, where everybody in the session is a VantagePoint user. To get into that level of detail in this session, where it's a broad open session to everybody, users and not, would probably lose some people. But I like where your head's at. Let's dig into those in the VantagePoint user specific material. All right. And rate of change is certainly something we can dig into. All right. So when you look at this and you can see that we've got bullishness happening here, right? We've got several indicators that are saying bullishness. All I'm interested right now is the end of this chart. I want to look at the right-hand side, right? How do I do that? Well, I go back 5 days. You can see it's a very specific thing. 1, 2, 3, 4, 5. So I'm going to read all my indicators here. Blue line is above, pulling away. I can go through my short term, my medium term, my long term, which means I'd be looking at the 1-day trend, the 2-day trend, the 3-day trend. I can cycle through those. Right, I can see that there was a resistance level back here that was already beaten and broken. I can see all that by looking at this chart. Jason, I have a higher high predicted and a higher low predicted, right? That's right, Sean. Theta will not hurt you if you know how to use it to your advantage. You're not wrong about that. But if I can neutralize it to give me the opportunity to generate income very quickly, I'm going to. Great comment, and thank you for that. I appreciate it. That's what we've got to be thinking about. Setting my expiration out 45 to 60 days gives me that opportunity. Same thing, January 19th on this. I've got bullishness, and if I look at those 5 days, I've got consolidated long-term bullish momentum, consolidated long-term momentum forecasted. My 2-day momentum is bullish. My 1-day momentum prediction is bullish. My predicted strength is bullish. My predicted high and predicted low are bullish. And my predicted trend indicators. This is a very strong prediction from the VantagePoint software. Which strike would I be thinking about? Well, that's the great thing about this, is that this trend has been on for quite some time. The strike that I would be thinking about now would be something, something that would give you the most opportunity to make the most money the fastest. Maybe it's a 140 strike. That 140 strike is around that gray candle. And I always say, get your strikes below the predicted high. Something touching that gray candle at or in the money, in my opinion, is the better strike than something outside of that gray candle. You're not going to get filled on all of them, but you can see where Builder's First Choice has an incredible trend that's been happening and is expected to continue into the next few days. And I've got no concern about that. This one by itself, just today on an options trade going out to January 19th, is up 25+% with a bid ask somewhere around that $9. So you can see where that's a very, very powerful one-day move on a stock that has some legs left in it to the end of the year. Twilio, TWLO, there's another one on my list. Let me pull up the Twilio chart, and this is a technology company that does some services. Fresh crossover on Twilio. You can see that happened here. The chart was kind of wonky, and the information from the AI was wonky, is a technical term, by the way. Was a little wonky. And now, right now, we're talking about a great trend that's expected to continue. Yes, JS, ITM options, in the money options in my head is from an educational standpoint where I'm always thinking. Twilio has that opportunity here. The blue line is above saying uptrend expected. Neural index is green, saying strength bullish. The 5-day momentum, 1, 2, 3, 4, 5. There we go. Consolidated to bearish, bullish, and bearish. So I've got a mix in the momentum. Does that meet my trade tolerances, my risk tolerances? It would in this case. And when you look at this, you can see there is bullishness here working its way in and expected bullishness to continue. This is a great trend using a January 19th expiration with about a 65 in the money option. Let me see, that gave me a bid ask of 630, and it's already up almost 11% last I checked. Now I've been talking to you for almost an hour, so I haven't looked at it lately. But these are the moves that I'm talking about that yesterday, the day before, came to fruition and said, hey, these are ones that could generate some really quick gains like Eric. Here's the fourth one that I'm putting on your list if you so choose. Again, I'm not making recommendations. I'm not providing trading advice, but from an educational standpoint, the artificial intelligence and the scanning that I did reading these indicators told me these are opportunities I need to keep an eye on. Now, you may not need to use options for Ericsson. It's about $5 a share, right? You can use options and get about a 60 bid ask, 60 cents, somewhere in that range. If you get a 60 cents on that one, you can see that there is some major bullishness in Ericsson that has been happening since the beginning of November. Does anybody sense something? Ericsson, beginning of November, bullish. Beginning of November, Twilio, bullish. Builder's First Source, bullish, beginning of November. Edwards Life Sciences, I can go back and find the beginning of November for you, and you can see that there was some bullishness working itself in, not as strong as everything else. But go look at the SPY. What date is that? The beginning of November. This is why the market overview is so valuable. Had you had this kind of session and seen these opportunities on November 11th when the VantagePoint software indicated these opportunities were there, all four of these are really great trenders, but even right now, still some stuff left in the tank. This Ericsson move is up 50% alone today, thanks to this artificial intelligence using that January 19th strike with a 65-cent bid ask, all right? Hey, Madhu, thank you for asking the question. He said, how do I find these, or how did you find these using IntelliScan? What I'm looking for in IntelliScan, so everybody knows that's that scanning tool. Once I know the sectors I'm looking for, I can simply build a scan based off of that information. If I build a scan based off of that information, I just put all the stocks in that scan, and that gives me the ability to say, what are the 4 points of confirmation saying right now about these opportunities? And I can go through and filter these assets and figure out what's expected to go up moving forward. I then, Madhu, can layer on my seasonal information. I have the ability to layer on a seasonal indicator that not everybody has access to. Of course, the VantagePoint software users have access to this indicator and can use it to their advantage, but it tells me what's expected to move higher based on the seasonal performance over the next 30 days. Now, the 30 days doesn't matter to me, so I'm going to kick that down to 20 days, right? And that's what I can do. That's a scanning mechanism that I can say the current predictions combined with the seasonal performance are giving me an opportunity to find some trends that are expected to move higher. There's Builder's First Choice right there at the top of that list. You see that 3% expected gain over the next 20 days, Madhu. And that's one example of how you can get to these kinds of stocks using IntelliScan. We'll have a scanning session in the near future, and we'll dig into the details on how to scan, not only using this, but any other tool out there. What kind of information you can pull into your scan so that you're not using redundant indicators and you're getting a comprehensive view. Why I say that is because one indicator that is looking at one thing is not enough in my book. 5 indicators looking at the same thing isn't always necessary. But a compilation of multiple indicators looking at different pieces of price for different reasons with different calculations can give me that ultimate sentiment around which way a trend is expected to go. And I can build all that in a scan. I can build that in any scan. I choose to use the artificial intelligence scan in the VantagePoint software because it's predictive and it's accurate. All right, good. Now, some people were asking about some stocks and some tickers. I do want to save some time to do that, so let's dive into that right now. Apple was one of the ones that people wanted to look at, so I'm going to bring up Apple. I'm looking at the chat here. The chat said Tesla. The chat said GLD and Meta. All right. No shock there. These are probably the stocks that are most requested. GLD and Meta. All right. And we'll end after going through these and digging through the details of these at your request. So here's a chart for Apple. When you look at Apple, you can see I've got 3 months of data pulled up, some really powerful trends in Apple. Same thing, November 1st, there was great bullishness that expected in Apple. That trend has been going for quite some time. You can see that the momentum got really strong, and then when the momentum started to fade, Apple started to slow down and just move sideways. Right now, what VantagePoint is saying about Apple is that there could be some bullishness in Apple. Look, just last night at 6:30, that medium term moved higher. The short term crossover had some bullishness in it as well. The long term crossover, from a trend standpoint, has been bullish the entire time. The triple crossover, and for those of you that don't know, all I'm doing is cycling through different term predictive moving averages in VantagePoint. These are moving averages that include 1, 2, and 3 days of predictive data in the calculation. These are patented predicted moving averages. And when we look at Apple, they're all bullish, right? I can also see that there's bullishness in the predicted high and predicted low. This is telling me that Apple, from a trend standpoint, has the opportunity to go up to 194.83 and down to 191.79, right? That's the range that we were expecting from Apple today so far. Apple's high is 194.76 and the low of 192.21. So it's virtually trading here. I'll color in the day, if you will, here to here. That's where Apple's trading today, right? VantagePoint is indicating that the trend in Apple is expected to continue bullishly. I'm going to pop on our verified support and resistance. Let me just pull that up. I like to see this on all my charts. Not a necessity, but you can see that Apple broke these resistance levels the other day. Was this a 52-week high? Nope. It's got room to the 52-week high. So it broke these resistance levels just yesterday. I need to see a candle close that confirms that, probably 2 candle closes that confirm that before I'm confident that Apple's going to move to 198. If I can get 2 candle closes above 192.63 today, that would give me the confidence to know that it could go another $6 between now and the end of the year. But there is certainly bullishness expected in Apple. Is that helpful? Who asked for Apple? Let me see. Apple. Even if you didn't ask for it, do you see how the predictive indicators made it very, very clear to see that there was a slight pullback expected and now it's expected to go? Sukhil's Ironworks. Does that help you understand, based on the predictive information in Apple, what's expected to do? Still continue bullishly, not rally, but still have a slow bullish climb over the next few days, probably the rest of this week. Yes, Tesla is on the list. Actually, Tesla is next. Who was asking for it? Renee. That's on the list. When you look at this, you can see that Tesla has some consolidation expected, even to the point that we had a crossover on the trend predictor to the downside. Not necessarily saying the trend is expected to go down. This is saying it's expected to go sideways. This is where we cycle through all our predictive indicators and go through and check the short term, check the long term. Short term says consolidated. Medium term says consolidated. Long term says, let me get my scribble out of the way, consolidated. So what's going on in this trend is expected to move sideways. Consolidated would be anything below here and above here. That is the channel that we'd be seeing. There might even be a tighter channel here to say this thing is going to stay right within this range today, right? Based on what's going on with these candle highs, 246 and below would say there's still consolidation happening in Tesla. VantagePoint's indicating this trend is expected to continue sideways. It's been sideways and the same for a couple of weeks. A little bit more bullishness than bearishness, but consolidated is consolidated. Can I make money in a consolidated market? Absolutely. Very short term, very quick moves, small moves, but they're there. They're absolutely there. So the trend is consolidating a bit. The predicted high is expected to be higher. The predicted low is expected to be lower than the previous day. So I'm expecting an inside candle today on Tesla, which furthers the consolidation expectation. There is some strength in this trend. So there may be a pop bullishly, short-lived pop, because momentum is bearish. The predictive indicators just told me that Tesla is expected to be consolidated. There could be a little bullish pop and then a pullback because momentum will set in. So let's look at the chart and say what would happen here. Tesla could pop up here and then momentum, because there's strength in it and it's in a channel. It's not expected to get above that 246. We're expecting an inside candle. Momentum should pull it back to somewhere in here. That would be my expectation on Tesla using these predictive indicators. Gold. What I love about GLD is that there's been some monster trends that traders have been able to take advantage of, but those monster trends are waning and waning fast. Look at this. Look at this high, first of all. Big, huge high up here on GLD. And then a pullback. That predicted moving average started pushing down, saying, oh, you know what? There's major consolidation expected from here, from a 2-day trend standpoint. Let's go check our 1-day predictive trend indicator and see what it says. Bearish. This is saying we're expecting this trend on the 1-day trend to continue lower. On the 1-day. The 2-day says consolidation. The 1-day says bearish. And the 3-day trend predictor says consolidation. So we got 2 consolidated and 1 bearish. That means I've got an indication of a bearish type market today. My predicted high is here. My predicted low is here. This is an outside candle, which says I could have a pop above the high and I could have it fall. Basically, if we look at yesterday's candle, we'd be trading right around yesterday's candle based on the predicted high, the predicted low, and the trend predictors. And look at this. There's weakness in that trend, and there has been for a few days. So that means we're expecting prices to be lower today. We're expecting it to have some weakness, and momentum is turned around, and all momentum indicators over the last several days have been pushing bearishly. This, if you haven't already made the decision on GLD, this is saying either set a really tight stop or take your profits and run, because this thing has some major bearishness working itself in based off of the predicted indicators. Renee, are you talking about gold? Renee says it better pop tomorrow. Or maybe you were talking about Tesla, right? Either way, what we're seeing from these is some bearishness going on. I don't know that I'll have a chance to get to NVIDIA. Sean, I don't know if you'll get a chance to get to AAN today. I usually try to keep these sessions to an hour, but you can always go to VantagePointForecast.com, get with myself or somebody on my team, and if you're not a VantagePoint user, we'd be happy to look at those for you. Here is the Meta forecast, and no question around what VantagePoint is saying around Meta, but I do want to point something out to everybody. And when I say no question, we see there's bearishness going on, right? Bearish, lower highs across the board. So we have almost bearishness across the board all the way, except look at this little tail. Look at this little thing happen in the short-term difference. Now, this doesn't mean anything except that there's a short-term pop in momentum. This is the one-day momentum indicator. This is saying the one-day momentum could cause prices to spike momentarily. Even the predicted high are saying, you know what, the 322 is not unlikely, especially with that short-term momentum. But then what's going to happen after that? Nothing good, right? When we look at Meta, this is saying nothing good is going to happen after a short-term pop because the strength is bearish. All the momentum indicators, except for that little tail on the short term, is bearish. The trend predictors, let's go short, bearish. Medium, we know is bearish. Long term, bearish. Triple cross. Prices have crossed below the triple cross and have stayed below the triple cross. I got nothing saying that there's bullishness left in Meta. I'd see more bearishness, and prices would be probably right in this region right here. Let me go look, actually. I haven't looked at any of these. Okay. Yeah. Meta. High of 322, low of 317. So let me see, 322. VantagePoint predicted a high of 322. Dead on the money. VantagePoint predicted a low of 314. So Meta is trading a little bit higher than that. It's probably looking like this is around where Meta is. Nailed that high. Absolutely nailed that high. Nailed that high on the SPY and so many of these. By now, I think you should be able to see why I put my confidence in these indicators. If you're in this session and you're not a VantagePoint user, this is the advantage that this software brings me. And this is why I rely on it day in, day out. If you're in this session and you are a VantagePoint user, then you know the real power that this has. And if you need help maximizing it, that's what we're here for. Get with our team in VantagePoint University. Go to the VantagePoint software site. Talk to somebody if you've already got the software, and we'd be glad to spend some time walking you through this, right? Let me just look at the chats. Renee, we just did Tesla a few minutes ago. Hopefully that was, oh, you were talking about Tesla, hoping it pops. All right, you got some good opportunity in it. Like you can see there's still some bullishness in it. So you're looking for this little pop to happen off of the neural and the short-term predictive difference. I like your thoughts, but just make sure you got good money management. Make sure you're protecting your downside, right? That's my educational input for you. That's it for me. It's 12:36. We got a good hour in, a solid session after a rough start. I appreciate everybody that's here. And if you haven't already, subscribe to this channel. This is the VantagePoint AI channel. We'd love to bring you this kind of content on a consistent basis. Or you can go to VantagePointForecast.com and talk with somebody one-on-one. And if you're a VantagePoint user, you got some questions, reach out. Let us know. You're part of the VantagePoint family. We take that seriously. I'm signing out. I want to say thank you for being here. Thank you for letting me give you the view from my vantage point. And happy holidays, everybody. Have a good one.